Hello everyone, this is Juan Sarmiento and today is Friday, November 25th. Okay, let's go through our current trades quickly and then we go to a selection of potential trades that I have selected for today. All I'm looking for now is any big movements above my smiley face for the bullish trades. If, let's say, Gilead had gone to 91, for example, we would take profits. But it is right there below, slightly below the smiley face, the apex here of the smiley face. So I'm not going to do anything there. The options expire November the 9th. Well, how much is that from now? Is 14 days. So I'm not really need to be concerned with that. Okay, if it was 7 days perhaps. Let's move on to the next one, Starbucks. December the 23rd is the expiration date for the shorts. So let's look at the risk graph. Again, it's below the smiley face, so I don't need to do anything. And the shorts expired on the 23rd. No need to do anything. Move on to Goldman Sachs. Okay, this one is right at the edge here. Okay, so do I need to do anything? Well, these are December the 9th. And because it's at the apex, it's not above or below it, I don't need to do anything. Here, what if the stock goes to 410? Well, then I begin to make profits. If it goes down, volatility may pick up and then I make profits too. So there's no need to change anything. Okay, the purpose of this trade is to take it easy, don't change anything until there is a move. So you can be reactive rather than proactive. Let's look at Caterpillar, same thing here. You can see that the smiley face is above the current price. We have a positive P&L and so do nothing. December the 9th is the expiration. Okay, moving on to JP Morgan. Similar, sort of a similar bullish move, but it's still below this smiley face here. What if the market collapsed tomorrow and the stock lands here? Well, the volatility would spike and I would make good money on that. December the 9th is my short, no need to do anything. Now we go to Lockheed Martin, and in this case, yeah, our shorts are expiring today and I have a $224 loss, not a big deal. So I want to sort of roll it over. I could close the position, say, well, this is a loser, let's get out of it. But I want to give it a good chance because saying, well, that's not a big loss, okay? So how do we do this? This is the expiration. Obviously, I wasn't paying attention last week, or perhaps I let it be anyway. And now today is the expiration of this 475. You can see the puts are expiring at 475 and the stock is trading at 482. Do I believe that it's going to fall below 475? No. So I can simply sell my puts expiring on the 23rd of December. Bang, just like that. And these short puts, this single short put will expire today, and then it would look like that. And I would roll over the short calls as well, and you get a few bucks there too. And then you end up looking to the original trade, more like the original trade. Okay, so let's do that. Let's do the put first. And then the call. The call is simply a rollover from, and that's the put already, because it's a single put. I don't need to close the short put that expires today because it will expire in not just a few hours, okay? A few moments, I think. I'm not sure if the markets close early today. And then it should usually does. Okay, let's do the rollover on the call side. And that gives me $785 credit. Okay, that's the whole purpose of this. And we can adjust it. let's let it sit here for a little. Okay, you can see that it's marked in the money here because of that call. Once that call is closed and rolled over, this ITM will disappear. Okay, let's go look for our trades that I have selected to look at. Cisco, Monster, ADI, that's Advanced Micro Devices, I think, Home Depot. Okay, so let's start with Cisco. And you can see that it has been going up nicely, and the volatility is dropped. It's sort of yellow, so that's a negative for it, for this trade. But the earnings is there, and you can see that the market has moved strongly. And let's put it here. I wanted to see my 10-day move, but it's not working. Oh, there it is. Okay, so 6.53%. That's a little bit low. I would like to see 10% move. Okay, but in any case, I have done the evaluation as usual this time in my spreadsheet for efficiency. And you can see that the earnings expected was 4.1 and the actual was 4.24, difference of 3.2%. That's not my 10%, okay? So the move, yeah, I have it, but the move wasn't that big. Then you see the volatility skew is favorable, 1.85, the maximum would be 3%. That's comparing the volatility of the front month options versus the volatility of the back month options. The difference is minimal. You can take a look at that here. Let me copy the trade as I have evaluated it, and you can enter it on your own as you see it here. Okay, you can stop the video and create this trade. Okay, here it is. And so I'm using the front month option, the back month options and the front month options to make this calculation. And I did it earlier today. Cisco. Here it is. Okay, so it's changed quite a bit. 31, 26. But it was tradable. It's changed a little bit. And the liquidity, is this Cisco? No, that's Home Depot. Okay, Cisco. Let's copy that. And paste it, and then analyze it. That's why it was different. Okay, so here's your options. We're gonna have to do this over. Let's see. Let's enter it here. You can see on the top, on the bottom right corner of your screen, you have the top are the long ones, and the two at the bottom are the front month. So I'm gonna put them here. Okay, 33.1, 25.7, 31.8, 25.1. Okay, so yeah, it's very tradable. The difference is 0.95, which is acceptable. You see that the puts are much lighter volatility than the calls, so that's why you have that weird skew. Then the price, you just have to say create duplicate, and that gives you the mid down right here, mid and natural. So let's enter that here. Mid 9.24, natural 9.42. That's perfect. 2%, 3% will be my maximum. And then the current IV percentile, you can see the chart here, right there is 23%. 23 is the volatility. But you can go to the trade tab, all products, and here you have Cisco, and then scroll it down, and it says here current IV percentile 7%. That's perfect. That's very low, 7%. So we can trade this. easily because everything seems to match. Let's look at the earnings. I was looking at the 0.73 versus 0.86. I was looking at the Home Depot, which is not so good. Yeah, this is 17.3%. Perfect. So I do want to trade this. All right. Then the other thing is it needs to be about 10% of my account, which is 102. Okay. So what am I going to enter? I'm going to enter how many copies of this trade? 10. Okay. So I'm going to enter 5 shorts, 10 longs. Let's look at that. Okay, create duplicate, confirm and send, and then you see the price. Oh, let's say multiple so that you can control the number of trades here. My account is ending 15, so I'm going to increase this until I get to 10,000 right there. Okay, so 10 copies of this trade will be 10 long straddles in 5 short straddles. Let's send that off. Okay, and we would, yeah, that's filled. Okay, great. Let's move on to the next one. Is Monster. In this case, I see that it says do not trade, do not trade, do not trade. So I'm not going to bother, but you can examine it. I examined it and concluded, no, that's not a good trade. Let's look at ADI. Copy the trade from here. And in this case, we have do not trade, to trade. So let's see what we can do about that. So let's say order, paste it. There it is. Just click on this little button here and it will be copied. Or you can just simply create it in your own account. Okay, so here it is. I'm going to buy the 170 March options and sell the December. You can change this, okay? Whatever works. You can definitely do December 30th. You can do December 23rd, you know, something like that, around 30 days. All right, let's go here and enter the volatility skew. And I'm going to enter it, copying it from here at the bottom right corner of your screen. 33.4, 29.3, 29.4, 28.5. And that gives me 2.4. That's tradable, okay? 3 will be, or more than 3 would be not acceptable. Liquidity, well, that's the price. Create duplicate, and then you have the mid and the natural down here below the order. So 34.9 versus 35.8, and that's less than 3%, so that's tradable. The current IV percentile, that's probably in the chart you would see, well, it's very close to the low here, but not quite, because it was very low before in December last year. So, and it's sort of in the middle. So when you go trade, it would say 29%. That's pretty high. Okay, I wouldn't blame you if you'd say no, let's not do that, because that means it's not. The volatility is not favorable. The volatility can still drop quite a bit, and if it drops, then we lose money if the volatility drops. So yeah, I would say no, and it's turning yellow here, so I would avoid this trade. As good as it looks right now, I say no. And then finally we have the last one in our group here is Home Depot, and we have entered it. So let's go to HD, and here the stock is moving nicely up. Volatility is not there at the bottom either. Okay, so I have done my analysis here, and you say do not trade, 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 do not trade. So that is telling you the current IV percentile is high as well, and they didn't beat the earnings by a big margin, so I'm going to avoid that too. Okay, so you can request this spreadsheet by sending me a message, and then I can send this by email or something like that, and then you can fill in the details on any stock that you might be interested in. Okay, now let's go and confirm this. Go to the monitor tab, and the Cisco did get filled, but that's the only one that I'm doing. The LMT, the puts got filled. I can adjust this rollover. Well, it should fill, but let's go down a little bit. And I'm just going to wait until it gets filled. I'm not going to do any more manipulation. It seems like it's right in the middle of the bid and ask. So when you say create duplicate, it will tell you this little dot, blue dot is telling you, oh, it's in the middle. It should fill. It should fill at some point. But if you did this, you will get $7.10. But in the middle somewhere, it will get filled. So you reduce it as it goes. You know, it's showing me the 8.2 as the top of the range. So let's see what happens, all right? And that's about it. I think we're pretty much all covered. Thank you very much for joining me, and I'll see you next time. Bye-bye.